Hello and welcome to Fund to Money. Here we're going to be discussing the answer to the question, should you be investing in gold now? Gold prices have been going up. There have been lots of discussion about investing in gold because the prices have gone up, and there's so much of discussion. There are quite a few people who have written to us asking us about what they should be doing. So we're trying to answer this question. We're going to be coming up with some important details and give you a direction how you should be looking at it. So wait for a little while longer. Welcome back. Welcome to Fund to Money. We are discussing whether you should be investing in gold right now. The prices of gold have been increasing for the past couple of months, and they seem to be going up. Of course, in between there are periods when they go down a little bit, but overall they have been going up. So the whole question comes whether you should be investing and how much should you invest, where should you invest. We are trying to compress all of it and put it together very quickly. Now, gold basically has been, we have a social and historical sort of connect with it. It's seen as a safe haven investment. It's an emergency sort of an investment. People used to, traditionally, people have accumulated gold. If you had a lot of gold, it was seen as a sign of wealth, right? But in the modern context, gold typically starts doing well when your financial assets are not doing well. Okay, so what would that mean? If your stocks are not doing well, your bonds and FDs and your bank products and financial things which involve your currency, right? So it's if the rupee or the currency, things which are denominated in currency, they are not doing well. And as we know, currency or any currency, whether it's a rupee or the dollar, it's a store of value. It's a store of purchasing power. When you have a currency, you are able to buy things, goods or services. So it's as a store of value. If you're losing confidence in that, you're not feeling great about it, then that's when gold starts doing well, because people think that its value will not change at all, or it will hold on it to its value, right? So when do people lose confidence? It's typically in conditions where there is financial uncertainty, there's economic uncertainty all around, or in a particular country, or all over the world, or in a particular region. There could be political uncertainty, war-like situation, other issues which is the mass migration influxes. So if you look around, you'll find lots of similarities from the description that I'm giving. So all these things are actually happening in the past couple of months, and that explains why gold prices have been going up. Every time you have seen some kind of uncertainty happening, political pressures happening, say in the Middle East, West Asia, due to oil-related tensions, and you'll suddenly find that gold is doing well. So these are some of the reasons why gold prices go up, and it's seen as a store of value. Even institutional investors put in tens and tens of millions of dollars money that goes in, sometimes into billions. So these are important things that one needs to keep in mind. Why people try to move in gold. Now, another thing that you need to keep in mind in India, this is important. Gold prices are denominated in dollars, right? So globally, the gold prices are given in people talk about it in dollars, and in India, naturally, you'll be buying or selling or investing. When you're investing, you'll be using rupees. But the reason why this is being mentioned is, if the rupee doesn't do well against the dollar, without any change happening, the prices may go up and down simply because of the relationship between rupee and the dollar. So some of it, not all of it, is because of economic conditions that some people think. It may be because of the economic conditions related to the currency. Of course, strength of the currency is indicated. Financial health also impacts. It gets reflected in the value of the currency. So One of the reasons why people go to gold, as we mentioned, is because they see it as a store of value. They see it as a safe haven investment. Things will not go wrong, they think. But is that true? The history tells us a different story. There have been periods when gold simply has not done well, right? So if you were a person abroad and were investing in dollars in gold, and in 1980 you had invested $100, right? Then in 2001, you would have probably been left with $17, right? So it's an 83% decline over, say, 21 years. There have been periods when dollar investments, rather gold investments, have gone by almost half. So one of them was between 1980 to 82, more than 50%, 2011 to 15. More than 40%. So in dollar terms, so that's how gold does in between. There are periods when it has done very well, just after the global financial crisis 2008. It's doing well now. So one thing is established, that its value goes up and down. So therefore you cannot call it a safe haven investment, because a safe haven investment will not allow a situation, or something will not happen where the value of the investment goes down, like all other market linked investments, where you have a market. Gold prices go up and down, so therefore it's not immune to upward or downward movements. It's pretty much like stocks, bonds, anything which is marketable. Now, so basically, like a stock market, in the short term, they call it the voting machine, where people around you are actually determining the fortunes of the market. So gold is pretty much like that. Depending on speculation, fear, anxiety, gold prices go up, and in the long term, it's based on fundamentals. So what basically is happening is the things that are driving up, whether it's the supply of gold or the demand for the gold, that's going to be determining the fundamentals of an economy, will determine how gold is doing. Now, when we are talking about fundamentals, it's obviously a relative thing that we're talking about. What are we talking about? When economic growth is going to happen, naturally, the gold price, your equities, are going to do much better. Your stocks are going to do much better. So if you as an investor think that India is going to enjoy economic growth, you will not be able to take the benefit if you invest in gold, because that has nothing to do with the economic activity. In fact, pure economic value of gold is absolutely nothing. It's just that we feel that it's of great value. Silver has got more economic value than gold, and it's a well-established fact. So therefore, if you are investing in gold for the long term, that means you think that there's not going to be enough economic growth. You don't have confidence in the economy, and that is not how we should be looking at the whole thing, because there's very few people who do not think that we will not be able to regain our economic growth globally and also in India. So therefore, that is a context that one needs to keep in mind. Gold actually helps you. I mean, people think that they're going to maintain purchasing power, there is going to be a store of value. The other important minus point about gold is that it doesn't pay dividends at all. There's no regular sort of income that you get from gold. Sovereign gold bonds, it gives you a coupon rate of 2.5%, the current version, and so that's interesting. So at least if you're investing in gold and you want a regular income, so you invest in sovereign gold bond, that still makes sense. What basically is happening is you are basically depending on your the capital gains. If it's you're investing in physical gold. If you're investing in physical gold, the issue then is you have got issues of purity, you've got issues of where to keep it, when you're going to sell it back, are you going to lose money a little bit in resale loss? All those things come in. So if you have to invest, you have to do it in a paperless form, either gold funds, gold mutual funds, or sovereign gold bonds. So that's where you should be doing. What you should also be keeping in mind is the taxation issue. If you invest for 1 year, it's going to be short-term capital gains tax. You pay short-term capital gains tax, which means the gain gets added to your income and get taxed at your income tax rate. If you stay for 3 years or more, you get inflation indexation benefit. So the capital gains get revised downwards, the taxable value becomes smaller, you pay 20% long-term capital gains tax. So this is also something that you need to keep in mind. So basically what you need to do is, in the long term, you know that equities and other financial investments are going to do well. So the question is then, how much should you be investing? So experts and other people, including people like us, would say that not more than 10%. Why? Because in an off sort of a year when things are not doing well, this uncertainty and this anxiety and fear, etc., gold, 10% of investment in gold of your overall investment. So if the value of overall investments that you have is 100, not more than 10 bucks. Now what that does is, if gold does really well, it makes sure that there's no single year when you do very badly. Overall growth rate is not all that bad. So basically what you need to do is, you have to invest in a mix of investments, asset classes. You need to invest in equities for longer term requirements, debt for shorter term requirements, and gold acts like one of those fire extinguishers that you have. It's like a hedge, it's like safety equipment that makes sure that you get a basic minimum return. So we hope you found this useful. We hope we've been able to answer this question. How much should you invest? Should you invest now? And to what extent you should be investing, and where you should be investing? We hope you found this useful. If you like this, hit the like button. If you if you want to share it with others, please go ahead and share it. Get connected with us on all leading social media networks. Wait for us, get connected with us, and wait for our next presentation. Till the next time, take very good care of yourself. Goodbye.